So let's dig into this. And I think maybe Chris can open up the floor. And I think there's been a lot in the news lately, especially with the Lemonades and the Roots of the world, about how do you scale and scale cost effectively. So looking at your time at Chubb and comparing it to your time in Hippo, what are some of the differences that you see when you're constructing your underwriting guidelines? What can you do now in Hippo that was harder to do as an incumbent?
Well, first, thanks. Oh, there you go. Tech, right? First, thanks, David, for having me, and thanks for that very nice introduction. I don't usually get introductions like that. That's great. From our perspective at Hippo, we take the InsurTech title very seriously. It's two parts. It's not just one. We're an insurance company and we're a tech company. We do both. We do both well, and it's incumbent upon us to do each very well, right? So when we think about the underwriting performance of the book, and we think about how do we build a sustainable portfolio over the long haul, of course, there's basic blocking and tackling that you have to do. At every insurance company, there's basics that you have to do. And many think of underwriting as, okay, when do you say no, right? Well, it's an unprotected risk, it's vacant. That's low-hanging fruit. That's the easy stuff. For us, what we want to be able to do is really align our customer base with our value proposition. So at Hippo, our mission is to proactively protect the joy of home ownership. It's oftentimes the most valuable asset that any individual or any family has. And we take that responsibility seriously. We want to partner with them to provide homeowners the opportunity to prevent loss, to mitigate loss, to not have the claim in the first place. That's the best claim experience anybody can experience. So we have the most widely adopted smart home program in the industry at this point. 75% of our clients opt into our smart home program. We provide name brand home mitigation, loss mitigation devices from Simply Safe, from Ring, ADT. 74% of our clients actually activate these devices and get use out of them. We've sent out over half a million devices to clients at this point in time. We're actively engaged in trying to help them mitigate loss. Now, who do we want to insure? And maybe it's not that side of the room. This side of the room are the individuals who see value in that and that value proposition resonates with them. Those are the individuals that we want to build as the base of our portfolio. That ends up being the backbone of the portfolio. And that will be then, because these folks are trying to mitigate loss, that's usually beneficial. They don't have the inconvenience of a loss experience, the having to be out of their house, having people in and out of their house. It's an inconvenience, it's a problem. They get to avoid that. We get to avoid the loss, which is better for our underwriting results. We have more predictable underwriting results, and therefore we have a much more sustainable long-term value proposition. We can continue to provide the services that we provide as a proactive partner in home ownership.
So there you have it from Chris. The left side of the room is the proactive homeowners. The right side of the room is the proactive auto. But I think sometimes being proactive is faced with the reality of where we sit today. And I think especially in property with the hurricanes that we've had, we sit in a hard market. So really this next question is for Skip. So Skip, sitting in the hard market, right? You still need to create a sustainable book of business. You still have to price effectively. But sitting on the insurer side, you get to be the one that makes those decisions. So what are the things that insurers can do now to take advantage of the hard market, to eke out that economic returns at the end of the game, and to limit their risks from policyholders that maybe are not as forward-thinking as the left side of the room?
Well, thank you, David, for inviting us. It's important, I think, with these markets, and it's not just hurricanes, it's the fires, it's the ice in Texas. There's whole new challenges to everyone now. And the important thing is to start with the right data source. So if you're writing these policies and you want to get the information on the risk, commercial, personal lines, farm and ranch, whatever it is you're writing, you have to have the right data sources. You have to be able to get data that you can use. There's a lot of data out there that you can throw at these problems, but if it's not usable, it's not digestible, and you can't discern how to use that data for rating and pricing, you're not going to go anywhere with that. So that's what we provide. We provide, and there are other providers out there also, and you can partner with the right folks too, like Chris was saying. So there's lots of different avenues. There's BetterView, there's TransUnion, there's other places that can give you a full picture of a risk and do it quickly. In this type of market, you don't have a lot of time to end up going through a long underwriting process with this. Consumers don't want it. No one is waiting on days and weeks to get policies anymore. So you need to do it quickly and accurately. And the way to do that is with the data providers, and there's a lot of InsurTech providers who do that now, and they do a really good job of it.
Yeah, so it looks like if you can save people time, they might be able to pay you a little extra money. So last piece we'll go to Simon for, and I think a lot of the things we've been talking about, auto and home, are really in the admitted market. And I think one of the areas where Simon shines is the E&S market. So InsurTechs have to make a choice. And we heard from Sean today earlier, being in the admitted market, some of the challenges. So the fact that you deal with a lot of E&S is an interesting thing to think about for InsurTechs. And Simon, how do you see InsurTechs looking at the opportunities of the E&S market and maybe some of those uninsurable risks as a place where they can grow and grow quickly to multiple states?
Firstly, thanks for inviting me today. So from an E&S perspective, there's absolutely opportunity. I think what we need to do is just kind of back up and look at really what's been happening in the E&S market over the last few years. From a direct written premiums perspective, seen double digits growth. So everything indicative there, should we say, in terms of significant growth? Well, the question is, why is that growth actually happening? Well, that's because of the admitted market booting out effectively the volatile policies that just the risk that it does not wish to take on at that point in time. So that is providing the E&S market with ultimately more risks to write. Now, when we dig into that data, we look at the combined ratio. It's running at an average of 99% in the US P&C E&S. Now, unless the operating costs are significantly high, the only thing that we need to look at there really is around the loss ratio. And that really comes back to a couple of things. High loss ratio in that area. Obviously COVID is one key area, but if we look at the nat cat perils, it's really those secondary perils which are really driving the losses there. So when we think about wildfire or severe convective storm, so in my view, yes, absolutely, there's an opportunity there for the market, but it really is around underwriting performance. It has to be around the triage, the pre-buying process. There has to be good due diligence in terms of the data points, and some of the points that were just made earlier really as regards the ability to bring the right data in. Data is ultimately going to drive this industry as we move forwards. It is doing that now, and it will just continue to do so. So being enabled for a particular insurer in that market, carrier in that market, they will be the ones that will really make the difference.
Makes sense. If you're running at 99% combined ratio, the data is important. So I think since Chris started us off with some of the smart home data that they have, maybe he can help us dig into the next section, thinking about the right data sources. So in our prep, one of the things that you told me is that being at Hippo, you've been able to integrate a lot of new data sources a lot quickly or a lot quicker than when you were an incumbent. In terms of the areas that you look at, specifically the smart home, what are some of those data sources, or maybe you could share an example of one of those 6 that's been helpful or instrumental?
Sure. So, to build on that story, in the first 3 months that I was with Hippo, we introduced 5 new data sources. Probably in the last 4 years of my prior career, we probably introduced 1 in 4 years. It's just a different pace and a different cultural mindset to how we think about the data sources and how we bring them online. And this really is supported and enabled by the tech side of the InsurTech equation, that our tech stack is uniquely capable of bringing on these data sources in a very quick way and in a scalable way, so that we don't have limits upon the number of APIs, the number of data sources that we actually can go out and bring in, process, and deliver a better product, right? These data sources are really doing 2 things for us. One is it helps us get to faster more accurate quotes for our clients, right? As Skip said, nobody's sitting around waiting a month to get a policy anymore. We want to be able to get accurate information, get an accurate quote to our clients, and this data is a source of that. The other piece of this is the data is really sources of insights in who these clients are and what we know about them, not just around expected losses, not just about loss costs, but about what their behaviors are. Who's more likely to hear that value proposition? Who's likely to activate the devices that they're that are being made available to them? And the ability to do that was a big reason why I ended up leaving larger blue blood insurers to come for this opportunity. This was an exciting opportunity to sit there and say, okay, you've got 100 different sources. Pick which one works. So Sarah Barrett is here somewhere today, and she works on our team. Her whole job every day is to wake up, think about innovation, think about technologies that we can use in the underwriting process, new data sources we can use. And so it was like unleashing us in a playground at ITC in Vegas a few weeks ago. And we met over 50 vendors out there. And when we talk about partners in the InsurTech space, we're only 4 years into this. We're still technically a startup. There are a ton of other startups out there that are working on data. We want to talk to you, and we're interested in your success and your ability to bring new products to the table so that we can leverage that. We're new. We don't have decades of loss data. We don't have decades of loss experience like the Allstate and the Travelers of the world. We have to compete on a different basis. We have to compete on these third-party data sources, thinking about them differently, bringing them to market quicker, using them in different ways to get to different insights. And that'll fill that gap that we're missing with some of those larger carriers.
Yeah, so it sounds like a lot of the same message resonates from Sean this morning, that being startup carrier, you have this blank slate and you can really merge with new data sources. And I think a great ad for Sarah out there. So startups that have data source, maybe in the networking opportunity to talk with Chris and Sarah about opportunities you can bring to the table. So Skip, I know we have a lot of incumbent carriers in the room, and they shouldn't feel like they're locked out from the opportunities that Kin and from Hippo. But how do you see the change from the standard where the large carriers use 20-year-old data source companies to migrating to some of the newer ones? And what do some of the newer data source companies need to do to be credible for traditional carriers?
Well, speaking as a 20-year-old data source company, we continue to evolve our sources and our partners and our data. So we still consider ourselves an InsurTech company, when InsurTech, before InsurTech was cool. So it's sort of, and I think one of the things Chris pointed out is how important it is to have an active API that you can work with other carriers, other data sources. There's no one answer to any of these questions. But the important thing is, how do you verify the data? How do you know to have the right data? How's that data going to work for you? And we partner with lots of different folks on POI data, on insured data. As we work just in the structures, but we partner with people who provide other data like that, and it provides to get a complete answer. Because if you're trying to bind a policy like Hippo does in minutes, you need to have that right answer, and you need to have it right away. And that's how you move forward with that. So these legacy companies, I'm sure we've all been in those offices and had those discussions with, well, why? It works. Well, yeah. But how much paper do you have in your office? And if they're going to compete with Hippo, then they need to be able to adjust and adapt and use these new tools. And if they're not going to do that, that's all of our opportunity in this space.
Yeah, so it sounds like you got to start with why, but that leaves us to Simon about, once you start with why, how do you get to the how, right? So the legacy carriers have to think about, how do they integrate it into their core systems? What do you think are some of the key factors they have to consider from the startup perspective, what they need, and then also from their side to be ready?
Yeah, it's a loaded question for sure. I think it's a little bit different when you're looking at this from a startup perspective and you're effectively greenfield. I think where you need to focus is ultimately start with the end in sight. never anything sort of truer said than that, as in think about what the outputs are, what you're trying to get to from a reporting standpoint, from the perspective of, you know, maybe responsiveness to your carriers, reinsurers, etc., internal and external. Off the back of that, you really want to sort of build out the ultimate data model that you're trying to get to. Now, obviously, it's great to have in mind what is, you know, best in class in each of the different areas. You know, reach for the sky from this perspective in terms of, you know, having a end-to-end model which has, you know, which is the optimum in everything that you could possibly ask for. That doesn't mean that you chase after that on day one, but it's good to have that as a blueprint, as a target. So the target operating model is absolutely fundamental, but I think equally, not going too wide, you're getting a niche and ensuring that you're following the niche and you're driving deep on that niche in terms of the opportunity. So I think if you can do those two things at the outset, that can add a lot of value.
Yeah, no, it definitely makes sense to kind of start with the end in mind. So we've been waiting around this for a while, the elephant in the room, cat claims. So this last section, we're going to really dig into cat claims and talk about, because if you think about it, cat claims is one thing that the larger you are, the harder it is to avoid and the more that you have to manage it. So we'll start with Chris. And I think this year is a really important year because it's the first year that millennials that decided to YOLO on their meme stocks actually saw the impact of hurricanes on insurance companies. And for those of you who have been watching Lemonade go up to 180 and down to 60, there's a real impact. So Chris, thinking about this from your perspective in underwriting, as you continue to grow, it's hard to avoid the parts of the United States that get impacted by wildfires, floods, and hurricanes. How do you continue to have sound underwriting as you saturate more and more of the US?
Yeah, and it's important, you know, it's, your heart goes out to Lemonade, but I mean, everybody else has been suffering the same thing, right? And this is an industry-wide experience for us all. Climate change is real, right? It's happening around us. The world is changing, and it's important for us that, you know, I don't think there's a silver bullet to any of this, but there's sound risk management, you know, that just needs to happen. And this hasn't changed in the industry forever. It's a fundamental part of insurance and how it runs. You've got to diversify your risks and be able to, you're not going to avoid the losses at this point. I can't think of a place in the US now that is a non-cat area. There's cats everywhere. Okay, so how do you properly set up your portfolio geographically so that you just don't need it all in one year, right? You avoid the volatility and you spread it out. You know, and it's hard when you're a startup, right? Because you've got to start somewhere. You've got to file somewhere and get it approved somewhere. You have to get it programmed somewhere. And so you always start someplace and you start within a concentration. We're going through this in our evolution as well. We're in the process of expanding outside of our initial 2 states. And as we do that, we'll create more resiliency in our portfolio and more volatility. It's basic risk management. I think the things that we can do better, and we can think about technology and helping us, obviously technology can help us in the mapping of risks and diversifying risks and risk modeling. But also thinking about how we can serve our customers during this time. Our clients are going through, you know, we think of it in terms of lost dollars. Clients think of it in terms of impact on their lives and impact on their homes. So how can we prepare them? How can we educate them on how to harden their homes? How can we engage with them prior to an event that's imminent? And, you know, first and foremost, get to safety. Protect their families, protect themselves, protect their lives first, then protect your property. And how can we help them protect their property at that point in time? And then it's about response, right? And how quickly can we be there? How can we be, you know, one thing that can't get lost in the InsurTech world is that this is still a human business. We deal with humans. We're human. We have to be empathetic at the time of loss. Make sure that we're empathetic with them. We pay their claim. We get them whole as quickly as humanly possible. And that's just a responsibility for us. How can we leverage technology, communication, social media in order to achieve those goals? I think that's the challenge that's before us.
Yeah, I think it's really important to think about the customer, and ultimately on the other end of a hurricane and spend is a person whose home is destroyed and has to be rebuilt. And I think this is actually the thinking that you had, Chris, behind our March event. And the reason why we thought about the question between digital first and customer first, because oftentimes it's easy to get caught up with digital first and lose track of customer first. So we'll kind of move to the center of the room with Skip. So Skip, you see the data, right? And the InsurTechs have to make the same choices that carriers have to make. Do they want to be a small carrier, a super regional carrier, or do they want to scale the whole country? And in making that decision, they have to pick and choose, and they have to figure out how to scale. So do you think in the early evolution of startups, it makes sense to potentially avoid states that are a little more difficult in regulation or a little more difficult based off of the types of risks and the type of business they have? Or do you think that it's okay to just go and scale as quickly as possible, but try and protect yourself with the reinsurer?
Well, I don't like any of those options, actually. The one thing I'm sure of is I'm glad I'm not a cat modeler, because it changes on a daily basis now what's going on. So the problem with your synopsis there is that for InsurTechs, and your opportunity is usually where the biggest risk is. So you need to really, you're not just managing cat losses, you're managing your opportunity, and that's the important thing. And I think it goes back to what Chris is saying and the fundamentals of underwriting. And also, you need to be in the fundamentals of the data, and the data has to be adaptable and changing. For instance, lumber costs since COVID have gone up 600%. They went down 400%. They're back up. So, and right now they're about flat. But there's labor issues and then there's other material issues. You can't get sheetrock, things like that. If you're opening a new territory that is subject to cats and other issues like that, and your data that you're pulling in is not accounting for things like that, and on not just on the replacement scale, but on the whole side, the whole economic and underwriting scale and the things you're looking at, it goes back to, as Simon said, it goes back to the data. You have to have the right data. You have to be able to make those decisions, and you have to be able to make them quickly, especially if you're an InsurTech and you're trying to compete with a legacy company. That's your advantage, is to be able to be faster and better at it. And again, it goes back to having the right data sources, having the right providers, partnering with the right people like Hippo's doing in order to make those responses and be able to move forward.
Yeah, no, I really like the concept of managing the opportunity, because there's definitely a lot out there. And this leads to my question for Simon in the specialty space. There's been a number of InsurTechs that have popped up, like Rethought, which is focused on inland flood, and Delos, it's really leaned in on wildfire. So where do you see as some of the opportunity areas? And do you think you can make money arbitraging off of these really niche catastrophe areas?
It has to be the single biggest opportunity in the industry right now. I don't think many people can really argue with that, mainly because of the direction it's taking. If we look at the severity and frequency of the secondary perils, for instance, looking at flood, hail, looking at wildfire incidences, everything's trending the wrong direction for the general population. But you could argue for InsurTech opportunities and insurance carriers is perhaps going the right direction in some ways. But I think what really needs to happen now is, there needs to be some kind of realization in the industry about, where do we go? What do we look at? And I think the data standpoint and the capabilities standpoint in terms of the opportunity at the carriers is really to grow their business. And so the InsurTechs need to be on the back of that to take advantage of that. And I think that is really coming. Technology is enabling that. Data providers are enabling that. And as you mentioned, I mean, there's a number of different InsurTechs, looking at different angles. One interesting one that I've seen called One Concern is looking at this from the ability to replicate the digital environment. So really looking at the bigger picture. So rather than looking at, say, Rethought, which is just flood only, or just isolating themselves to one specific peril, it's now trying to look at the whole digital picture right the way across the industry, because there's obviously correlation that's happening across all these different perils as well. And that, I think that's the key consideration.
Yeah, no, I definitely think there's a lot of opportunity. And I think even if you look in an area that's really untapped is cyber, and that's continuing to grow and produce a lot of opportunities for InsurTechs. So we're getting near the end. So I think one thing that's really important is you heard a lot about what's important to building a book of business in these different areas. But what is one key takeaway for the incumbents and for the startups that they can do to build their sustainable book of business? So Simon, we'll start with you.
I would say look for the opportunity. The niche is the important part. Yeah, don't go too broad too early. It's focused because obviously as a startup, you have minimal capacity, should we say, from a resource standpoint, from a financial standpoint. So I think the ability to narrow in onto a very specific problem, and particularly where other startups have not gone before perhaps, and really target that and do that really well before you think about expansion.
Yeah, I like targeting. Skip?
I think the one thing is time. I think if you're not selling time, if what your niche or the tools you're providing aren't selling time to the customer experience, to the underwriting time frame, to whatever, you're going to miss out. There's a lot of solutions to a lot of problems if you have all the time in the world to make them go away. But that's not how this market goes. That's not what the public is demanding, consumers are demanding. So if your tool or your prospect is not selling time and saving time and pushing that forward, I think you're missing the key ingredient to success.
Yeah, sell time. Chris?
I'm buying. I think, you know, what we're trying to do is we're trying to rethink what the product is that we're selling, right? So we think traditionally of the insurance product as a contract. It's a promise. You know, when you have a claim, we'll be there, we'll indemnify you. Indemnification was the product. What we're trying to think about is that that's the backstop. If everything else we do fails, if the smart home devices that we give you don't work, if the tens of thousands of tele-maintenance calls that we take in a year don't help you, you know, prevent the loss, okay, the insurance is there on the back end. So we want to fundamentally think and turn this thing around. Instead of thinking from claims back, think forward. Think, okay, how do we prevent the claims that are happening? That creates a better customer experience. It creates a better home ownership experience. It redefines what it is, what our responsibilities in the relationship are. And then how can we bring the technology? How can we bring the third-party data sources? Can we bring the partnerships in the industry to bear to get to that mission? So put the customer first, put the loss prevention first, and then everything else kind of falls in place behind that. And I think that's kind of where we're trying to head.
I like it. So think about risk mitigation before risk transfer.